Hi everyone. Welcome to pipsedge.com. Today we will understand how short selling in Forex is different than stock. Before getting into details, please read the disclaimer. I am not a financial advisor and anything mentioned on this channel is not financial advice. Short selling definition. Financial traders refer to short selling in different ways. Some call it shorting, others use the phrase going short. Mainly involves going against the traditional trading mantra of buying low and selling high. In a typical short sell, the trader sells a borrowed asset hoping that its price will drop. The asset is later repurchased at a new, lower price, thereby allowing the trader to make a profit. How to short a stock. In the 17th century, Isaac Lemery bought the Dutch East India Company shares. This Dutch trader was, however, expecting that the share price would drop significantly. His story gets a little dark, though. He was later caught telling lies to cause a decline in the stock's price artificially. Here's how short selling can help a trader profit from declining stock prices. The trader borrows the shares they wish to short from people who already own them. However, this is done through a stockbroker or fund manager. The trader isn't directly involved in the borrowing. The trader's borrowed shares are then sold in the open market. A time later, when the share prices fall, the trader buys back the shares at the new reduced prices. The lender takes back the borrowed shares, and the trader pockets the profit. Short selling stock example. A trader wants to short company X shares. He or she may borrow 10,000 shares from their local index fund manager, for a fee, and sells them at $1 each. The sale of these shares will give the trader $10,000 minus the borrowing fee. Later on, company X shares fall to 80 cents per share. The trader then buys back the 10,000 shares at $8,000. The trader returns the shares to the lender and enjoys a $2,000 profit. Impact of short selling in stock market. Several advantages of taking a short stock position, including: there's potential to reap massive earnings. It provides a way for traders to survive in a bear market. Shorting a stock can be speculative and can be used for hedging purposes. Hedging is the practice of holding two market positions concurrently. Short selling is applicable to multiple financial tools and securities. With the rise of online trading and numerous derivative products, a trader may take a short position in several different markets simultaneously. How to short a currency. Much like short selling in the stock market, short selling in foreign exchange involves predicting and anticipating the depreciation of a particular currency. Forex short selling example. Let's say that you're confident that the euro rate will fall soon. You are going to consider the US dollar to euro currency pair where the USD is the base, and the euro is the quote currency. The US dollar to euro price is, say, 100.00, so you click sell. You wait for a while, the price drops to 98.00, and you close the trade. Simple mathematics shows that you'll have made 200 pips of profit by shorting currency in a Forex deal. Impact of short selling in Forex market. As is the case with other trading strategies, there's always the risk of making a bad call when short selling in Forex. One may, for example, find themselves on the wrong side of the trade because they misread the likely performance of currency and took an unduly pessimistic view of its prospects. In other times, the trader's initial analysis might have been correct, but subsequent unforeseen events drive them into a loss. Short selling in Forex versus stock. In a nutshell, short selling speculates on a falling market, whether stock or Forex. The major difference lies in the assets traded. In the stock market, you short shares while short selling in Forex involves currencies. If the underlying market dips, you stand to make a profit. There's also high exposure to losses if the asset's prices don't behave as you had predicted. If an asset's price goes up, a trader's loss could potentially be unlimited. Key things to remember before shorting currency or stock. Perform a complete fundamental analysis on the asset beforehand. Be mindful of your short position size. The larger your position size, the higher the risk. However, a minimal position might not yield any significant profit. Set up trading alerts. These alerts notify when your market reaches a particular level. The notifications will help you decide what steps to take next. That's about it for today. See you tomorrow. Until then, have a great week ahead and happy trading.